Let's start off with the Nairobi Securities Exchange, which picked up today for the first time over the last few days, about 6.33 points up for the 20-share index. What did you see in the market?
Basically, a few counters driving the market. Investors taking a bet on the economy. After the central bank cut its rate, guys are feeling like we might see some boost in the economy. So if you look at the counters that went up, especially cement sector, Bamburi, and housing finance, which are normally related to the whole interest rate business.
Yes.
Because their business are driven by people actually demanding houses. So people feel like with the central bank cutting their rate and people expecting the rate to be cut further, though a bit misinformed, that they're expecting now the pickup for demand for cement, for housing. So it will boost Bamburi and HFCK.
Bamburi, for instance, hitting an 11-month high today, which is unprecedented. But it is an interesting point that both housing finance and Bamburi are up today. On the same day, Has Consult released a property a report for Q2, where rent prices are actually up significantly. In fact, rent prices are now up 10 times considered to the last 2 years.
Yes, that's true. The only issue is if you look at rent in the absolute terms,
yes,
it looks like it has gone up. But if you look at rental yield, it's actually stagnated and come down, especially in the so-called posh areas. You'll find rental yields are between 7 and 8%. But if you go to the outskirts of Nairobi, rental yields are close to 12%. So with that in mind, and most construction and most developments are actually happening outside the outskirts of Nairobi. So you find people are actually now factoring that in. If Bamburi is selling cement, if housing finance are doing what they are doing, then there should be more demand for houses, especially at the outskirts of Nairobi, where rental yields are still higher, but rent itself is low.
The other interesting thing was that the rates on mortgages have been falling much faster than even the CBR, which you would imagine, therefore, that we'd have a lot more mortgages, but that is not the case as yet.
Again, like what I said last time, rates might fall on paper, but doesn't necessarily mean that they actually giving out the money.
Yes.
But mortgage is secured business, so it shouldn't really follow the CBR. Because you have the property, you have the land as security. What really needs to follow CBR is the unsecured loans.
Yes.
Because you're basically taking a risk on the person or on their pay slip, on their salary, or that they'll continue having a job. So you find mortgage rates, them following CBR and following the rest of the interest rates, is a bit foolhardy. They're actually supposed to remain low because they are secured.
All right, the shilling, on the other hand, let's move on to the currency, strengthening today because of the expectation the central bank will keep mopping up excess liquidity, and the dollar demand has subsided.
Again, like what I said last time, these guys have become basically janitors with a mop. Anything that makes the shilling goes weak, they're just mopping it away.
Right.
They've reduced the central bank rate. They've reduced their emergency discount window rate. So the only thing that is actually keeping the shilling where it is to make sure that it remains scarce. How long they'll be able to do that is depending on how long IMF is willing to support their reserves.
Okay, I want to pick out some other interesting stocks, one of which is Everready today. News that it is considering diversifying from batteries into a very unusual one, property, and it's expecting shareholders to approve this at its AGM on August the 9th. What do you make of this?
Last kicks of a dying horse.
Come on, be a bit more optimistic.
It has been a long time that they actually should have diversified.
Yes.
Because of fake batteries, counterfeits, cheaper imports of batteries than what they're actually trying to do. So diversifying was the only way of actually keeping the horse alive.
Keeping the horse alive, because we remember a period, maybe 2 years in a row, where it was straight down in the loss-making territory for Everready.
Yes, and even the time that they did record profits, it wasn't because revenues grew, it's because they cut costs.
Right.
They're really in a sector which they can't sustain. So in properties everywhere, everyone else is going, so yeah.
EABL has been a big star performer in the market in this past few weeks, but Sheni Adetu has left. There's a new MD, Delvin Hansworth, but Sheni Adetu remains in the board. What do you make of this whole arrangement?
It's just smoothing out handover until this new guy gets hold of the market and how Kenyans drink their beer or how they like their beer and stuff like that. So I don't think there will be a huge impact on their bottom line or see revenues coming down, because people drink beer no matter who the CEO of the company is anyway. So it's just smoothing the transition, getting him to settle in with staff, getting to get the ropes in the Kenyan market and the East African market, basically.
And finally, Safaricom, still one of the big performers in terms of activity of the market. The latest CCK report shows that it has lost market share, very marginally, but it has lost market share, which might be expected. What are your thoughts on Safaricom?
I think until termination rates are reduced, they will still remain a bit dominant. We need termination rates to reduce to actually increase competition in the market. When the other mobile telephone companies actually style up and up their games and sort out their distribution, the only thing that is keeping Safaricom where it is the distribution network that they've actually established. Without that, they really don't have anything to actually keep their share price up.
All right, we'll leave it there. Reginald Kadzutu with the Amana Capital. Many thanks for coming on the program.